Okay, students, I am starting again with the recording of what we had discussed today. So, we are talking about fund-based accounting in case of NPO. This is what we are discussing right now. Okay. So, before we start with this and we discuss this, there are a couple of things that you need to know. Income which is received by a NPO, income received by NPO can be treated in three ways. And they have three ways to do that. Okay, there are three ways in which NPOs can treat their income. One method is that income is of regular nature and is to be used in meeting day-to-day expenses. So all such incomes which are of regular nature and used to meet day-to-day expenses, these incomes are transferred to income and expenditure account. Examples are, as we have seen, can be subscription, donation, etc. Now there can be another type of income. ठीक है. Income for which is used for more than 1 year to meet the expenses made on members. Now these incomes are example is life membership fees. Now what we do with these incomes? These incomes are added to capital fund. This is what we have been doing. Now there can be a third type of income also. There can be a third type of income also. This income is for meeting expenses on any specific activity. Examples can be specific donations. Now such incomes are added to that specific fund in the balance sheet. We do this is what we do. So we are going to talk right now about this particular thing. We are going to talk about this right now. This is called fund-based accounting. This we call as fund-based accounting. This is called as fund-based accounting. Okay. This is where we have to deal with. Now we will be talking about this right now. Right? Now, so let us see now further. Now, what is said about this fund-based accounting? That it is a system of accounting. Okay, it is a system of accounting. Now, in this system of accounting, what we do is when we make a fund for anything, all receipts and expenses of that fund are shown in that fund only. We show in that fund is created and all income and receipts are shown in that. All receipts are added to it, added to the fund, and all expenses are instead, and all expenses are subtracted from the fund. That means when we do this, we are not writing the income expenses on income and expenditure account. Okay. So for example, now let us see how it is done. Now let us see how it is done. Say for example, this is question number 1. Now this question number 1 has 4 different cases. 4 different cases. Okay, now let us see here. In this question number 1, there are 4 cases. And I will discuss one by one all these cases here. So one is definitely this. Here there's a prize fund of rupees 16,000. We have been only given that there is a prize fund of 16,000. That's it. Question does not say whether we have a fund or not. So as there is no fund, so what we'll do is this amount will be showing in income and expenditure account. Income and expenditure account. And you'll see this that will show this amount as expenditure in this account. Moving further, now if we see it further, there's case B, whereas there's a prize fund of rupees 25,000 and there's a price expense of 16,000. We have used this amount to award prizes. Now, this expense has been made out of this fund. This expense has been made out of this fund. We have these expenses have been made and we have a fund also for this purpose. Now there is a specific fund for it, so we are not supposed to, there is a specific fund for it. So we cannot use this expense in income expenditure. So one more thing we need to remember, that when we write any expenses in income expenditure, we mean to say there is some income here, there is some income on this side, there is some income on this side against which this expense have been made. So we make expenses against some income here. So there's income against which the expenses have been made. But in this case, we have made this expense, but then we have a fund for this purpose. So this expenses are out of these funds. Therefore, we will not be showing this expense in our income and expenditure account. Whereas we'll be showing this in our as a separate subtract from the fund. So how do we deal with this? We deal with this is by making a balance sheet. In the balance sheet, what we do is when we make a balance sheet, we show the fund here, we show the fund here, and all the expenses from the fund are subtracted from that fund. So as you can see here, we have made the balance sheet. In balance sheet on the liabilities side, we have shown the fund, and then we have subtracted the expense out of that fund. This is how we go. Similarly, we move further when we go to case C here. In case C, we have a fund, and then we have a fund here. We also have expenses made out of that fund. We have also got donation for this fund during the year. So this donation, this particular donation belongs to this fund. So what we'll do is when we make a balance sheet, in the balance sheet, we will be showing the price fund, which is of 25,000. And this you can see here. We have a price fund of 25,000 as given in the balance sheet. Price fund is there. Then there is a donation coming to this fund. So we'll be adding this fund to this donation to the fund itself. This donation is not going to the income and expenditure account. It is added to the fund. And then this expense is also not going to the income expenditure account. It is also subtracted from the fund here. So this is how we have to treat. So when we have a specific fund, all donations coming to that fund are added to that fund. All expenses from that fund are also subtracted from that fund. And we do this all in the balance sheet. Now, fourth case of the question number 1. As usual, you can see here, as we have discussed already, हमने पहले भी देखा है कि हमारे पास एक फंड है यहाँ पे. जस्ट we already have a fund here. ये हमारे पास एक प्राइस फंड है. Then there is some expense out of this. Price awarded हमने किया है इसी में से. Then as you can see here, we have as we have awarded the prizes also from this. Then we have received donations also. We have received donations. Then हमने क्या करना है? We are showing here price fund. We have added donations to this. Then there is expense of 6,000, 16,000 price awarded. This expense भी हमने इस fund में से minus किया. Now one more thing is there in this part. We have 10% price fund investment. हमारे कुछ investments है. Date भी दी हुई है कि ये investment साल के शुरू से थे. And we are making the balance sheet on 31st December. So on this 25,000, we should be getting interest at the rate of 10% for whole year. तो 25,000 का 10% 2,500 और क्वेश्चन में हमको 2,500 मिल गया. तो this 2,500 will be added to this fund also. The purpose, ये फंड क्या कह रहा है? ये फंड कह रहा है हमारे पास 25,000 का फंड था, 6,000 का डोनेशन मिला, तो ये डोनेशन हमारा इनकम एक्सपेंडिचर में नहीं जाएगा, फंड में ऐड होगा. इस फंड के अगेंस्ट हमने इन्वेस्टमेंट कर रखे हैं यहाँ पे एसेट साइड. ये देखिए आप इन्वेस्टमेंट कर रखे हैं 10% इन्वेस्टमेंट्स. इस इन्वेस्टमेंट्स में हमें इनकम हो रही है, तो वो जो इनकम हो रही है वो भी हम इस फंड में ही ऐड करेंगे. ये भी हम इनकम एक्सपेंडिचर में नहीं दिखाएंगे. जब भी ये परसेंटेज दिया होगा हमें इन्वेस्टमेंट के साथ, तो हमें इंटरेस्ट निकालना है और इंटरेस्ट निकाल कर देखना है. और हमें यहाँ पे इंटरेस्ट उतना मिल भी गया है, 10% इसका 2,500 होता है, हमें मिल भी गया, तो वही हम फंड में ऐड कर देंगे. हमें 16,000 हमने खर्च किया, अब हमारे पास 17,500 का फंड है. This all things we are doing in the balance sheet. ठीक है, we are nothing to do any of these things in the income expenditure account. Moving further, this is the question number 2. Now there are some important points. Just hold on, please. Now, when we are dealing with these fund-based accounting, there are 2-3 more points which need to be considered. We'll see them one by one. If now number 1, there are certain things here. If expenses increase the amount of fund available. Now what I mean to say here, my question here is that if fund is rupees 30,000 and expenses are more than are, let me take an example, 35,000. How do we show? Now, why this problem is different? Now, to explain you that, let me take you to our solution. In this case, say here, let us take off case C. In this case, case C, we have this fund of 31,000 and expenses are 16. Now, if these expenses become 36,000, now what would happen is if these expenses are, say here, 36,000, then what would happen is these, if this become 36 here, in that case, this figure will become minus. This figure will become minus. We will have it in negative. So can we show this as a negative figure? We cannot. So if our expenses here increase, these expenses are more than the fund balance, in that case, this difference, which is a negative figure, we will treat that we have made these expenses out of income. So in that situation, we will show this in our income and expenditure account. So in that case, what we do is, in that case, excess expenses are shown in income and expenditure account. And why do we show that way? We show them that way because why do we show that way? We show them because we assume it that they have been made out of profits. So we show in income and expenditure account to mean that these expenses, these extra expenses have been made out of profits, out of our regular income. That is the reason. This is one point. So to sum up this all, we need to understand that whenever expenses of the fund are more than fund balance, the excess expenses are shown in income and expenditure account. This is what we are going to do. This is the important thing that you need to remember. Okay, now this is what we need to remember. Next, this was one important point. Now we'll move on to other important things. Sometimes fund investment is given. So what we need to do is, when this is given, we have to show these investments are shown as assets. That is one thing. Now there's another thing related to this. Another thing related to this, and that is if percentage is also given. Another thing is relating if percentage is given along with the investments. Now what we need to do then, if that is the case, we must, if percentage is given, we must calculate interest at the rate of percentage. This would mean, now what this would mean? This would mean that if amount of interest we are calculating is more than the interest received, then the remaining figure is shown as accrued interest. We'll see this with an example. Now we'll see this with an example. Okay, I come back to the solution sheet first, and this is here. Now, rest of the things we'll be solving. I'm giving you one just small clip. Yeah, now let us see here. In this question number 5, there's a prize fund of 38,000 on this 38,000 on 1st April 2019, 38,000. There's a prize fund investment at the rate 10% is given, and the fund investment amount is given as 38,000. So 10% of 38 is 3,800. We should receive interest of 3,800. But here, interest received is given to you as 2,100 only. Total interest is 3,800. We have received only 2,100. So we have received 2,100. The difference of 1,700, which you have not received, will be treated as accrued interest. But that will be added to the fund. Total interest here, we must keep in mind that the total interest that we should have received is both 3,800, this both. But we have received only 2,100. We had received only this amount. We have received only this. We had not received this amount. But then this is the total interest that we should have received. So this amount which we have not received, this amount will be shown in the balance sheet as on the asset side as accrued interest. This will be shown here as accrued interest. So this is the case here. Okay. So once we have accrued interest, it will be shown on the liabilities side, and it will also be shown on the asset side as accrued interest. These are the points that you need to keep in mind. This interest we have received. This interest we have received. This interest we have received. There's no problem. So as we have received this, so this must have been a part of our balance bank account. But this we have not received. So it will be added to the fund and showed as debtors or receivable interest on the assets also. Yeah, so this is the another important point which should make it clear. Now, coming back to our discussion on that sheet. So what we were discussing here, that to sum up this discussion again, what I do is calculate interest on investments when percentage given in the question. This interest may or may not have been received in full. Interest not received should be added to the fund and should also appear on the assets side. This is the important lesson from this second point. Now I need to discuss with you the third point, which I had to discuss with you. Just a minute. Let me clear this all. The third important point is there are two types of funds. There are two types of funds. What are they? These funds. One, funds can be for meeting revenue nature expenses, like examples, prize fund, tournament fund, etc. Then there can be funds which are for meeting capital expenditure letter. Then there can be funds to meet capital expenditure. For example, building fund, pavilion fund, etc. Now, what is the difference? Now, the question is, what is the difference? So, we need to see what is the difference between these two funds. Okay. Now, difference is these funds do not create asset. That is what happens with these funds. These funds do not create assets. But when it comes to these funds, these funds do create assets. These funds do create assets. So there is a treatment in difference. There is a difference in the treatment. So treated differently. We'll see this with an example. Come back to the sheet that we're doing. We'll come back to that and we'll see. Now let me see here. Come on, this question number 6. Now in this question number 6, we'll find there is a building fund of 2,40,000. Building fund of 240. And then you have, the club has constructed a building of 1,80,000. Now, obviously, 1,80,000 used from the fund. So we'll subtract from the fund 1,80,000. But then when we are using this 1,80,000, we are creating an asset of 1,80,000. So on the asset side, we will show building of 1,80,000. Now I am subtracting from here 180 and I am showing on the asset side. Balance sheet will not tally. So whenever you are creating an asset out of the fund, you have to add that amount in the capital fund also. Now this could be a bit confusing for some. When we are creating an asset, we are using the fund, so we subtract from the fund. But then when an asset is created, this amount is added to this capital fund. Now I'll try to explain you why this is happening. I'll try to explain you why this is happening. Oh, I'm not sharing the screen right now. I'm sorry, I'm sorry, I'm sorry. Let me come back. Now I'm sharing the screen. I come back to this question again, which I'm explaining. We have an opening building fund of 2,40,000. We have opening fund of building 2,40,000. We have spent 1,80,000 for constructing the building. So we'll subtract 1,80,000 from the building fund. And as when we have used this 1,80,000 for constructing the building, we have created an asset of 1,80,000. So we subtract from the fund, but then we'll show that asset on the building on the asset side also. We'll subtract from the building fund and we'll show it on the asset side also. Both things will happen. You have to keep this in mind. Okay, this has to be kept in mind here. So what we are doing is this here we have subtracted this amount of building. But then when we have subtracted it here, we are adding this building, we are showing this building on the asset side because we are using the fund and we are creating the building. Now, this building belongs to whom? This building does not belong to the donor who has given this donation for the building. But now this building belongs to the organizations. Therefore, when we are showing the building here, we'll also add the amount of building on the capital fund. We'll add this building in the capital fund. Now, how do we do this? We'll add it here and we'll add it to the capital fund. So whenever there is a fund which is for any particular asset, so what we do is we'll subtract from that fund, asset fund. We'll show that asset on the asset side. Okay, we'll show that asset on the asset side, and simultaneously that amount which we are spending on that creation of asset, we'll add it to the capital fund. The simple reason is for this is that's anybody who gives a donation for creating an asset for the NPO, that person is not expecting that that building will belong to him or her. That asset is now belonging to the NPO. So that as long as the organization does not use that amount of fund, it is a liability for the organization. So if this amount is kept unused, it will be treated as liability. This amount will be treated as liability if it is unused. But now when it is used up, when you use this fund, this is not more a liability, it creates an asset, and that asset is now belonging to the organization. This happens only in case of when you're creating an asset. It does not happen in case of any other fund. For example, this is not happening in the prize fund. We need not to add it to the capital fund anything. This is not happening to the sports fund. We are not adding anything to the capital fund. This is not happening in the tournament fund. We are not adding to the capital fund. This is not happening in the prize fund. We are not adding to the capital fund. But in this question number 5, this question number 6, we are creating an asset. So when we are creating an asset, there is a need to add it to the capital fund. And the simple reason is that now that asset belongs to the organization. When we are creating an asset, that belongs to the, so when we are creating an asset, that amount is subtracted from the fund, then it will be added to the assets, and then it will also be added to the capital fund. This is happening. So keeping these in mind, you will be solving now the question number 7. You'll be solving the question number 7. And this again is a building fund. We'll be trying to solve question number 8. Question number 8 here. And similarly, question number 9. This question number 9 is, these are not different cases. This is a one question. This is just one question. TK will be solving these questions. And then send it to me. Question number 10 is there. These are the different things. Here, I just need to tell you that this general fund, which is given here, and this general fund, which is given here, General fund is as capital fund. It is just as a capital fund. It is nothing different, but it is just a capital fund. This is your two. So this capital fund. And one more thing I just need to tell you, that when you have a capital fund or general fund and you get interest from that fund, this particular interest is part of your regular income. So this interest will go to income and expenditure account. This interest will go to income and expenditure account. Okay, this will go there. This is to be taken care. This will go to income and expenditure account. Otherwise, all other funds that you have will be, this all other sports fund will be going to the balance sheet. This all will be going to the balance sheet. This has to go to the balance sheet. Okay. Same way, this felicitation dinner. This is a case of a felicitation dinner. There is no fund for this. You don't have a fund for this felicitation dinner. Okay. there is no fund for this felicitation dinner. So this amount is, you have received 25,000. You have spent only 21,500. So you are left with here 3,500 surplus from felicitation dinner. It will go to income and expenditure account. Income and expenditure account. Now the question can be, why we are showing an income expenditure account? The reason is simple. We are showing this income expenditure account because there is no fund as such for this. There is no fund. There is no fund. There is no fund for felicitation. And there is no fund for felicitation. But so surplus amount will go to income and expenditure account. Okay, so these are the few things which you have to keep in mind. I just remind them again. Okay, I just have to tell you, and then you can. So here, one by one, can we revise the points which I mentioned? Number one, if expenses are more than the fund balance, excess expenses will be shown in income and expenditure account. This is one. This is the first thing that you need to do. Second point. What was the second point? Funds, asset creating. Okay. Asset creating funds. In case that way, asset created is to be shown on asset side, and the amount of asset created to be added to capital fund or general fund. Capital fund and general fund is same. Another thing that you need to see is the third point was, if percent of interest is given with the investments, given with the fund investments, interest at the given percentage should be calculated. This interest may or may not have been received. Amount of interest earned but not received should be treated as accrued interest and shown on asset side. It should also be added to the fund like any income arising from the fund. So this is there. So here interest has been earned but not received. And the fourth thing, as I told you, what was that point? Was it okay? I think this is there. Fine. Okay. Fine. One more point is there. I just put that also with you here. Surpluses from activities for which funds have not been created to be shown in for example felicitation dinner, governor's party, etc. So what I mean to say here, if we receive donations for any of these things, okay, we may receive donations for any of these things. When we receive donations for, say, felicitation dinner or governor's party, so in that case, what happens? Felicitation, and I think you'll excuse me for that. So when this event is over, dinner is over or governor's party is over, till that time, it is not over. वो हमारी liabilities में आएगा. It will be shown in the liabilities. But when it is over, and then if still there is some amount left of the felicitation dinner का कुछ amount बच रहा है हमारे पास में, and then some amount is left for the governor's party, that surplus, if any, it should be shown in income and expenditure account. So I have tried these things. When you practice more questions, you'll be understanding them better. So I just put it there. Excess of expenses after the funds will be shown in income expenditure account, because we assume that the fund money is used up. Fund का पैसा तो use हो गया, और जो हमने अपनी income कमाई उसमें से हमने खर्च किया होगा. तो इनकम के साथ मैच करने के लिए हम उसको एक्सपेंसेस को हम इनकम एक्सपेंडिचर में दिखाएंगे. कोई हम एसेट क्रिएट करेंगे तो उस एसेट का जो भी हमारा अमाउंट है उतना ही हम जनरल फंड या कैपिटल फंड में भी ऐड करेंगे और एसेट में भी दिखाएंगे. अगर हमें परसेंटेज दिया हुआ है तो इंटरेस्ट हमें उसी परसेंटेज से निकालना है, और एक्रूड इंटरेस्ट अगर कुछ बन रहा है तो उसको भी एक्रूड इंटरेस्ट की तरह ही ट्रीट करना है, एसेट में भी दिखाना है और उस फंड में भी ऐड करना. और अगर हमारा गवर्नर पार्टी का या फेलिसिटेशन डिनर का कुछ सरप्लस बच रहा है, उसको हम इनकम एक्सपेंडिचर अकाउंट में दिखा सकते हैं उस इवेंट के बाद में। इस ट्रीटमेंट में देयर इज अल्टरनेट ट्रीटमेंट आल्सो, देयर इज अल्टरनेट आल्सो, that surplus is continued to be shown in बैलेंस शीट। ऐसा भी हम करते हैं, कुछ लोग ऐसा भी ट्रीटमेंट करते हैं कि अगर सरप्लस बच रहा है तो उसको हम बैलेंस शीट में ही शो कर रहे हैं। तो आई थिंक कि अभी हम दोनों ट्रीटमेंट समझ लें, फिर हम देख लेंगे जैसा भी उस समय हमें लगता है कि बोर्ड की एक्सेप्टेबिलिटी होगी हम देख लेंगे। तो हम इसको सरप्लस अमाउंट को हम उसमें भी दिखा सकते हैं, सरप्लस अमाउंट को हम इनकम एक्सपेंडिचर में भी दिखा सकते हैं और हम उसको बैलेंस शीट के अंदर भी शो कर सकते हैं। ठीक है, कंटिन्यूड अमाउंट को। सो दिस इज देयर एंड I just end this meeting right now.